Today is Tuesday, October 21st. And Scott, Mike, Tyler, I'd like to think on this show we say a lot of things that are informative for our listeners about sports, what's going on in the world, the markets, the economy. We're going to start off with a little different vibe today. Let's talk about something that we were a huge swing and miss on. So on September 10th on episode 4, we talked about Apple releasing the iPhone 17. You and I kind of lambasted the technology, the software, the hardware, the AI, the company as a whole, the product set.
Yes, for years now.
For a long time. So, that's what we said on September 10th. Let's put in that clip of you and I discussing what we think is going to happen with the iPhone 17 release, and then kind of we'll talk about what has actually occurred. Apple iPhone 17 series will disappoint again. Are you fading or trading that?
I've been disappointed with Apple since basically iPhone 4. For me, that's a kind of a rhetorical question. Apple's destroying my faith and just my encouragement of them so much that I'm eventually going to be impressed.
That's fair.
I'll trade that all day long and twice on Thursday.
Agreed with you that iPhones have underwhelmed for years. The Apple Intelligence, people think is way, way, way behind competitors.
Really bad.
The hardware is behind. OpenAI is like light years ahead of Siri. There's a lot of consumer fatigue. Every new iPhone you get, you got to buy different AirPods, a different charger, different accessories.
Crazy.
Really, the only reason people continue to own iPhones is the blue text message. So we've seen now Apple 10 days into the iPhone 17 release, and it's been a ginormous hit, both here and overseas, which I think is huge because of China and some tariff issues. So for Apple iPhone 17 to be selling out overseas is huge. But you've got iPhone 17 up 14% year over year compared to the 16 in the first 10 days. This is the biggest sales surge for them since the pandemic. This is the biggest upgrade system or cycle that they've had since the pandemic. How do we get this so wrong?
Yes, Mike and Tyler are beautiful and lovely cast behind the scenes, who made us put this together, because I think it's something to always know what we said wrongly before, and something that we, I think, believed correctly, though, Jake, which is I have an iPhone 16 and can't stand it, number one. Number two, I'm so surprised that there's been that much demand. I mean, Are people's lives that desperate that we have gone out and made the 17 so much a bigger part of our market share, to where now the 17 is going to make us so much happier in our lives? I'm pretty surprised, because if you look at some of the upgrades that the phone has, cameras and things like that, a little faster processing, there to me is still not that killer app or that killer kind of approach that Apple has brought forth in the 17 that, to me, a lot of folks have been waiting for, or they've been promising.
Yeah.
And so while there may be some disappointment coming out sometime sooner or later, as there has been with this kind of situation, like you mentioned, the numbers being much better with the 17 versus the 16 and the 15 upgrade cycle, maybe there still is that remains to be seen type of disappointment that comes out with the 17, because I frankly am not an Apple bull, and an Apple bull, they're out there everywhere, but the bearishness in me in Apple is just because, again, their cycle and their products just don't impress me that much anymore.
Yeah, you mentioned some of the upgrades they made. I think the camera was a huge one. I know the one that really impressed was the live translation, and that's something that's been around for the past few years, but now is in Apple Intelligence, as you can have a conversation with somebody in a different language, and just,
you and I,
we
tend to talk.
You never speak English. So
I don't. So
I can just hold it up to you, and it'll translate the gibberish you're saying into
get
English.
Me, though. That's the thing. If it actually
we
figures
talked
me
about
out,
how
that would be
Siri
amazing.
doesn't know you, doesn't
That's
know what
right.
you're saying. So, I mean, Apple's trading at an all-time high in these last 2 days. Finally went positive year to date. I think in yesterday's trading session on Monday, sitting around 263 right now a share. Do you see this as a breakout, or is this just momentum from this iPhone from 10 days of sales?
Fake out to me. Okay. I think it's a big hope of Apple finally getting it right. You mentioned Siri, which has been an absolutely terrible relationship. You want to talk about all the bad relationships I've had, even compared to you, Jake, in the last, say, several years. That's one with Siri. Siri does not understand me. In fact, if you say to Siri, why don't you understand things? She'll say, I don't understand that. There's nothing as far as depth to Siri at all whatsoever. I use Siri a lot still and manage to get through my daily life like that. But there's so much to be desired with Siri these days that has not improved. If you look at Siri over the last, say, several years, that's one area that they've really, really fallen short on. I don't know if there's anybody working on Siri at Apple, frankly, and it shows that there isn't. So I think there's a lot of things left over that Apple has to deliver here. And I love the numbers. Apple iPhone 17. How much different, really, truly, deeply, is the 17 versus, say, the 14 versus the 10 versus the 7? I kind of wish I still had the 7 and maybe the 6, because it was going to be cheaper, certainly. The battery life is probably about the same. And I wouldn't be as frustrated at the end of the day when I'm expecting all these great things to happen with the phone, and they frankly don't work.
I mean, I was reluctant. I don't know which iPhone it was, but the one that had the button at the bottom, when they switched to just the glossy top, I was reluctant to switch.
Yes.
The home button. I loved the home button. But I think there's going to just only be more and more innovation in these phones, you would think. I mean, the way AI and tech runs right now, everything is updated it seems like day to week to month. So you would think there's going to be more technology. I mean, we talked on that episode about switching off of iPhone and Apple products. I mean, I actually made a switch. So I've got Poly.
Is that a phone?
I've got Poly AirPods.
Oh my gosh.
Poly
AirPods,
I should say. Things. I switched off of the AirPods. Finally, these early returns, I've heard my audio is great, even when I'm walking the dog. And that was a problem I had with the AirPods, was the my muffled audio. And I can still control Siri / my phone from them. So I've made a switch off of an Apple product, and we'll see how that progresses.
The muffled thing is something the dog complains about all the time. When the dog does take you for a walk, I appreciate that there's going to be more hearing available of your beautiful commentary, Jake. The funny thing, too, is the AirPods stink. Let's just put it that way. There's not been a big technology upgrade there. In fact, the technology upgrades in the AirPods themselves have made them worse. I think it's harder to use. They're more slippery. They're smaller. I feel like they don't connect to the phone as well. They're more expensive. So that's the other thing that Apple's done, which is probably behind some of the stock things that are going on out there, is now all these upgrades and some of the software things that are happening, like you mentioned, which all these upgrades that happen to the Apple iPhone are just a scam to basically drain your battery and get you to buy more stuff and get them to find more data on you. So That's really not a great thing for the consumer overall. And the AirPods 2 thing is an interesting situation because the next chance I get, and hopefully it's going to be my Christmas present to myself, is getting off the iPhone in general. I'm going to try to go either for the Pixel or the Samsung Galaxy, and it's one of those things, or the Android, and it's like I want to get out of the ecosystem, but I have so much tied into the ecosystem. And that's what they do, is they hook you in, and you kind of feel like I can't get out of this because I'm stuck in prison. So if those go well, that'll be a good experience for everybody, just to know that we're not so tied into Apple. And as that starts to kind of unwind with this iPhone 17 disappointment that I think is coming, maybe Apple's the one that has to figure out finally how to do some real upgrades and really help the consumer.
Yeah, I think it's a great point. Once you're in the Apple universe, you're in the cloud. All of your
text
devices connect.
Yes.
We talked about the blue text versus the green text, but I think the point is tremendous, and that there are more competitors now than there were 10 years ago.
Very true.
And both on the hardware side and the quality of the phones, and I think honestly the acceptance and the consumer sentiment to not have an iPhone. I think there are more competitors. We're seeing Android kind of tick up. You're seeing those other competitors and foldable phones coming on the way, which, everything makes a comeback in style, right? I think people say that. And this is sort of a retro look back to like the Razr.
Oh my God, the Razr and the Razr, yes.
Flip open an iPhone, still have that glossy screen. I think that's actually going to come back, but I think it's going to be at a high price
Let's
point.
bring back the bag phone. The 5-pound phone that has the big antenna on it. I think that would look cool walking down the street. Number 2.
Let's go no phones.
No phones. There you go. No phones, no social media, but still watch the podcast. Here's the other quick thing. Do you remember how much time our favorite people in the media, or even just folks that were analysts, talked about how much cash Apple had on the books?
Yep.
Billions and billions of dollars. What are they going to do with it? Oh my gosh, they're so strong. They're so amazing because they have a chance to just buy everybody out. Well, now that's been wound down a bit over time. But secondly, those other companies, to your point, have started to rise up, and they've gotten maybe too big for Apple to buy them. I think you're looking at iPhone competition that's going to come down from maybe a ChatGPT potentially. Maybe Twitter ends up putting a phone out there because there's a lot of opportunity, I think, to take some market share away from Apple. And also, Apple did not use that cash very well, did they? Jake, they had chances to kind of upgrade and augment their kind of systems, their software. Certainly, some of their chances to at least have a little bit more functionality. Didn't use that cash very well, and now look where it is. It's kind of not talked about anymore because there's not that many opportunities for Apple to do something other than, oh my goodness, improve themselves from the interior, and they don't seem to be able to do that, at least in the last, say, 7 to 10 years.
Yeah, we'll see where it goes. I'm a little more optimistic on Apple given these 10 days, but it is just 10 days.
And it's about time.
It's about time for sure. And I think you also said on that 4th episode that eventually you're going to be so disappointed that they'll have to exceed your expectations. So maybe we're not there yet, but we're getting close. But again, it's only been 10 days. I think we'll see what comes down the pike. I'm looking at the consumer demand for it as obviously a strong bullish sign. But we'll see. I mean, we'll see what happens in 30 days or 40 days or 50 days.
One quick note, and that in that episode, I think I did actually push my phone off the table, and it smashed sort of so much. I mean, it's got another bash in the back end, so now it doesn't want to work even further, which is great because it wasn't going to probably work anyway. How about the AirTags too? I just threw one of my AirTags on the way to record the pod out the window and ran over it on purpose because it would stop connecting. It would keep bugging me to connect when I was on the phone. It would kind of make all these weird noises, like something was going on in the car or whatever.
Bugging you.
Somebody, well,
literally bugging
they were bugging me and taking my data and not working the way the AirTag should work, and those are very expensive too. And so again, these components of that ecosystem, they're supposed to work so well that if people really stopped and listened and learned and thought about what this thing's supposed to be doing as far as that accessory, they don't work for what they're supposed to be doing, or at least their functionality is to me very poor.
So first 10 days strong on demand. We'll see if that persists. I mean, speaking of persisting, we are now on day 20 of a government shutdown.
You're kidding me. The government shut down?
Government shutdown on
Looks like
October
everything's
1st.
working.
As of this recording, October 21st. So unless we get a deal done tonight, as of this pod release, we'll be on 21 days or 3 weeks of the shutdown. We've had no progress. There's no, obviously government's not in session, so there's no technical progress to be made, but there is nothing out of either side, the Democrats or Republicans, that signal that a resolution is coming anytime soon. I mean, in your eyes, are you paying attention to this? Obviously, we've covered that we don't really think from a market standpoint it has an effect. You can certainly see that in the returns. On the economic side, I think it needs to go longer than probably a month or 2 months to really matter. But, I mean, there are employees in the thousands that work in the government that have now missed a paycheck and are in danger of missing 2 paychecks if this ends up going a month or longer.
Yes, and in past shutdowns, Jake, there's been this furlough situation where if it does affect a paycheck or 2, they usually get compensated back pay wise, so that usually doesn't make that big of a deal. Trump and the fellas have talked about and the gals have talked about not paying back some of those particular situations. That's not exactly settling, if you will. So that's something that's going to be a different maybe aspect here. It's the strangest thing that Democrats and Republicans are not getting along, and they're not coming to an agreement on things, whether it's the healthcare situation or the spending overall for the government. That is not going to be a chasm that is bridged very soon. What I do think is going to happen that we have going for us is we have the holidays coming up. We've got the end of the year. We have things that I believe D.C. in general, the administration wants to have at least cosmetically looked at as like, okay, well, they got something done by, say, 2026. What this means is there's probably going to be a longer shutdown than we originally thought. Certainly, that originally was projected. Originally than there was, say, compared to recent shutdowns, because we seem to have shutdowns every other 6 months, every other year. But the takeaway here is that it doesn't really affect things too much, does it, just yet? The data thing we can talk about shortly is about how much data is getting kind of missed in the overall flow. But the government shutdown so far doesn't really seemingly affect too much of the overall business mechanism, say, of the U.S. economy, because the economy is very strong, businesses are very smart, and the consumer is very, very hungry. And so those things will continue to go on. And I think there's a lot of folks out there that are actually happy the government is shut down.
Yeah, I agree from an overall macro standpoint. We're not at a point of it mattering yet. I think when you think personally or interpersonally to those employees that are on furlough now, it's extremely hard, and there's no end in sight seemingly. And also, on top of Trump, suggesting that they may not be back paying employees, it looks like the administration is also going to use this as an opportunity to lay off another 4,000 to 10,000 employees. And so you've got people that are currently on furlough that when this comes to an end, they may not even be going back to a job. So this while on the macro sense is maybe no big deal yet, kind of dirt off the shoulder, there's thousands of people out there that their lives are in complete and utter
it's
question right now.
Uncertainty. Water off the duck's back to some, and a drowning facility in others. Because you're right, not only do those unfortunate employees maybe get laid off or have some sort of job reduction going forward, as we've seen from data recently, Jake, when it was still being delivered, data in the overall macro sense when it came to employment, at least, not output for the economy so far as GDP, but certainly employment and labor, has weakened. So now you've got a lot of folks coming out of the maybe possibly government sector, public sector, going into private sector. It's not like there's all these jobs screaming out there that these folks who are probably very skilled and very willing to work are going to go out and get. So that's the other issue is now as that data doesn't flow in, doesn't show us how kind of maybe weak the labor market is just now, those folks that have the need to get a job after all this, however it shakes out, may not even have a job to find in the private sector because it was already weakening before we got into the shutdown.
Exactly. And yesterday, as in Monday the 20th, House Minority Speaker Hakeem Jeffries basically said what we said at the top. There is no end in sight. There's no resolution for the healthcare divisiveness that they see. And so, I've got some stats here. The U.S. Travel Association estimates a loss of about $1 billion a week from people not
Yikes.
going to D.C. or national parks. The Small Business Administration issues loans for $860 million a week for small businesses, obviously. That's shut down. You've got insurance policies, mortgages, and real estate deals that may be delayed, if not, halted altogether. The FAA says that air traffic controllers, on top of the issues we've already seen for the last year since President Trump has taken office, are reporting shortages in almost every major airport. And I think one of the things you said about timeline is super salient, because you can't have airport issues around the holidays. Thanksgiving to basically New Year's, you can't afford to have those issues because you've got millions and millions and millions of people in and out of these major airports every single week.
And we've had them. And we've had them in non-holiday periods where it's been rough. We've had a couple in some other holiday periods, similar kind of ish to say like some spring holiday periods back in a few years ago when we had just some issues with FAA2 situations. And so you're right. That could be one of those things that might be the impetus for them to kind of get a deal done at the last minute, or at least kind of forge something ahead to where at least the FAA stuff gets figured out of the ATC guys, because of the fact that they're going to look and say, oh my gosh, if we have a slowdown or a massive outage, let's say, or some sort of confusion or contribution to, say, some travel difficulties, that's bad optics, no matter what. And that's something that the administration, I believe, knows that that's not exactly what you want on the front pages. So there's going to be these things done and do-si-doed in the back end and the back side of things that we won't see right away. And then all of a sudden, Jake, as we remember that the situations before when we've had shutdowns, things look like they're miles apart. And then you wake up the next day and at 3 a.m. they've got a deal done, because all of a sudden, oh my gosh, we came to the table and said, okay, we got our lives back together. We got our SH, whatever together, and we figured out how to work together. And now all of a sudden the government's back in session and the market probably goes down after that.
Yeah, I mean, I'd probably make the argument that 99% of government activity is done behind the scenes that we don't see.
Very true.
Let's pivot the conversation to data, which you've mentioned. We've got a Fed meeting coming up next week on, I think, the 28th. And something that we covered a couple episodes ago was, and I was correct in that the Fed was going to cut. You were correct in your own way of saying if the Fed cuts, they're going to cut multiple times. But we haven't had data we haven't had September data come in. We missed our data reports on the beginning of October. We're looking like we're going to miss the beginning of November if this persists. How has this ever happened before, one, in your experience? And how does the Fed basically see any progress or regression in their moves from, let's say, last year? Because we know that a cut in September wouldn't have flown through the economy yet in data and unemployment. So how can the Fed reasonably make a decision next week as to cut or stay or hike, which they won't, if they don't have the latest data point?
Well, they have it. And that's the key point, I think, is that
from these revisions?
Yeah, they know what's going on. I mean, Jerome Powell and the folks in there, as far as the Fed governors, they know where the economy is. I'd be hard-pressed and I'd be scared, frankly, if just because this shutdown, all of a sudden the Fed is in the dark. The Fed can get the data they need to make the choices they need to make. I think they made the wrong one, to your point. My argument, and you're very kind in saying that I was right in my own way. I thought they're going to make fun of me and say you were right in your own mind, and that you're going to explain.
You made it a no-lose situation for yourself.
Hey, that's the way I do it.
You said they're not going to cut, but if they do.
I'm very good at that.
Yeah.
And I think this is another situation where we'd say, look, the Fed cut. The markets, to me, they liked the cut versus they didn't, as far as not getting it. But if you look at rates, I mean, rates haven't moved that much. In fact, if you look at rates after the cut, boys and girls, mortgage rates at some points have gone up over the course of that time. 10-year Treasury note rates have gone up. Now, they're back to almost where they were before, maybe slightly, just a skosh down, but that's give or take a day. So there really hasn't been that big of an impact so far. And that's where I think the key point is what is the impact going to be going forward as we get this door opened and, frankly, kicked open by the Fed and Jerome Powell, where they're going to be doing more cuts. And they have to, because they've already kind of gone down that road. They've already taken the exit off the highway and said, or gotten the exit on the highway and said, hey, we're going to floor it and go all-time accommodative. To your last question, or first question, and my last response, has this ever happened before? Not to the degree yet that we're expecting, in the sense of there hasn't been this massive gap in data points that have come out where the government prepares all this data points and we have these habitual releases, every couple weeks here and there, whether it's CPI, whether it's labor, things like that, business confidence, whatever else it is, surveys. So that's a concern, but it also goes to show you something that's going to happen. The government now is going to be maybe taking themselves out of that a little bit, in the sense of we're going to have this maybe a more automated system. We're going to have a better way to calculate this data, contribute to it. And maybe that's a good thing going forward for these data points, to make them maybe a little more accurate, because there were squawks about things before these data points were not delivered that they weren't even accurate anyway.
Yeah, you did say you wanted a little vacation from data points. It felt a little nice.
And a vacation I've had.
Yeah. And the rates thing, they have bounced around over the last month since the Fed cut 25 basis points. Certainly not the reaction that we saw last year when we cut 50 and rates spiked. So it hasn't been that precipitous, but they have moved around almost unchanged in that time period. So what happens next week if the Fed comes out? I think what they'll do probably is just cut 25 basis points. It'll look like it's
part of the course,
course of action and pretty natural. What happens if they pause and cite that they have no idea what's going on? Is that a huge market mover?
Shaker,
or, does that signal non-confidence to the market?
It does. I think it signals non-confidence to the administration. I think it signals maybe some of that independence that maybe the Fed says they have, and clearly they don't. But it also signals that I think Jay Powell will probably get pushed down the stairs by President Trump. You thought that push in the back that you liked, when he slapped him in the back when they were going over the new Fed plans at the new building.
So fun.
Yeah, it's ridiculous. He
so
really pushed him in the back there and almost knocked him over. Jay Powell should be on watch for maybe another accident if that happens, because of the fact that there is a massive dependency now on the Fed to maybe pick up the slack here. And Jake, maybe they go with a little 50 kiss here, because that could be another way of saying, hey, we think the economy is weaker than we thought it was earlier. The data points that we have access to, quote unquote, which they don't want to talk about too heavily and give that goose away. They say, well, the data looks a little bit weaker than we might have expected, and therefore going forward, if the shutdown lasts, here's a 50 basis point little kicker so that everybody can be happy going into Thanksgiving and Christmas and be aware that the Fed is back in action, baby, and ready to supply this economy with a little bit more inflation, say fuel and fire, because I think they're making a mistake here either way, but they're already down that track.
So here's kind of an unofficial fade or trade to wrap this up. Are we both in agreement that the Fed is going to cut next week?
I believe so, yes. And I think 25 is your minimum. I think there's a chance you get a little 50 kicker. Yep.
A little jumbo.
The two-timer. The two-timer, because they've already done that. And now the Fed maybe says, hey, we're here now. We've got data. We know what we're doing. And they're back in this, say, favor of not only the administration, but back in that favor of the economy, saying that they're on target and they're on track. And I don't think there's anything in the economy that says the Fed needed to cut before the shutdown or now after.
You've been having coffee with Stephen Myron lately? You sound like you want a neutral rate.
Well, here, look at the thing. I mean, everybody at the Fed, depending on what day it is or who's talking to whom, gives you a little bit of a different aspect. But remember what happened even recently, like you mentioned. Some of the Fed governors have talked about at these certain conferences, and some of just the outspeak and some of the outbursts have said, well, now we're looking at more of a neutral rate. You're right. And that neutral rate is meaning staying put. They're not staying put.
Yeah. Agreed. So third week of the fresh quarter means we have kicked off earnings season. We had big banks come in last week with just blowout earnings reports. I mean, across the Fin 5, the major names. It was interesting, from the big banks, you had credit that was healthier than expected. Goldman reported revenues up across the trading sector, banking, M&A bounce from the investment banking side of things, and then wealth management revenues from you were also up. So, I mean, just a pretty big across the board secular move up for revenues in the banking sector. And then we had regional banks come in and kind of tear down some of that optimism a few days following that with some issues on the credit side and with some lenders and borrowers. So how have you digested, let's say, banking as a whole from last week, and how much, obviously regional banks work with a different type of consumer than the big banks do. So how do you kind of piece and parse those two sizes of banks when you're looking at data?
Yes, tomato with those guys in a weird way, because banking is, you're right, a interesting business these days. The banks all kind of do the same thing, whether they're regional or say large scale money center. But how they get there is different. Like you said, Jake, the lending person, or the lending demand is different. The loan demand is different. Certainly the backing that the banks get. So the way they sell off or they resell some of the loans, the access points they have to kind of re-risk their portfolios is way different. We've seen that in the last couple of years with Silicon Valley Bank and some of those other ones where they've had the situations where they weren't able to de-risk as well, and maybe that was more of an issue of the risk management department. But regardless, that hurt those banks that were maybe more regional in nature. And also, don't forget, and we learned this back in say the great financial crisis when you were maybe just in the crib, it was like, meaning your house, it was like, that was back when all these big banks got bailed out. All these big banks got covered. But the guys and gals that were at the regional banks or some of the smaller banks that were not the big regionals were on their own. They were left out in the cold in the middle of summer. And that was because the banks that really are going to make it are the JP Morgans, the Citis, the Wells, and those guys. So my point on the banks is, it's funny to see all these big banks continue to do well because they should be doing well. The regional banks are kind of being forced to kind of make up maybe that gap or still make up their way of getting to those large earning growth because of the fact that that's the way their business runs. The fact too that we have these interest rate mechanisms going on out there where everybody wants a lower rate, that's increasing the risk. And we're saying we want to lower rates, we want to lend more money, we want to send more money to consumers and businesses and homes. That's the risk that you take in lending to people that can't afford a rate at 5% or at 7%, but you're going to give them one at 4 or 6. And that's because they can afford it then, but they can't afford it or they can't pass the sniff test at that higher rate. That, to me, is not a lending portfolio that I want to go out and rush and get to and buy for. And so that's something, too, to keep in mind to see how banks continue to make up that difference because of the fact, like you mentioned, some of the big banks did great. That's not a surprise. But then the regional banks here are trying to find ways to get back to that level. And it's going to be hard to do that given the fact that we have rates kind of not going anywhere.
Yeah, and you made that point when we talked about mortgage rates and housing prices a couple of weeks ago with the possible buyer that can afford 6% but not 7%. Is that really a healthy consumer? Everybody's favorite banking guy, I would say the Patrick Mahomes of the banking sector, Jamie Dimon. He came out and he referred to First Brands, which is a subprime auto lender that they basically took a $170 million hit on the JPM books as a cockroach. And to something that I think you've said in the past that I have repeated to our clients in a different kind of light, but you say, returns beget returns, where people like to say that when the stock market goes up, it's got to come down. You like to say when it goes up, that's an indicator that it's going to go up again. I think that's what Jamie Dimon's saying here is that this is not going to be the only blemish on the credit market is First Brands and the subprime auto lender. If this is happening with one, it's going to happen with another and going to happen with another. So is this controlled? I know you mentioned the regional banking issues from Synchrony and Silicon Valley back in 23, and we had like a week where everybody thought that we were in another banking crisis and this was going to pop up everywhere, and it was really controlled. Do you see where we're at now as another credit bubble, or do you see it kind of like 23 where these are kind of spotty in different places, but overall we're fairly healthy?
Yeah, one off par for the course, I think, for now, because, overall that's not a huge loss for JP Morgan. In fact, that's a rounding error. Those losses, Jake, just happen. You mentioned Kingsview and how we do our wealth management. We don't buy all the stocks we buy. They don't always go up every day. There's things that are going to happen that we just don't foresee or you can't control. I love the term cockroaches that were used because it's like that make me first think about your bedroom, but secondly, and where you sleep. It's like, where else are there not going to be cockroaches when it comes to when there's lending like this? I mean, when there's so much demand for credit that's on the resale market, meaning what credit that's kind of one-off or laid off on different other. Right, exactly. And there's money out there chasing that, Jake, because the rates are better than they are at the 10-year notes. They're better than they are, say, in the corporate environment as far as, getting a corporate bond out there. So banks are easily getting that lend portfolio, or that lending portfolio resold to the overall market, the secondary market. So, yeah, there's going to be cockroaches out there, but you take the good with the bad. And it just, you mentioned, it's more of a sentiment thing. And I think as long as the economy is as strong as we believe it is, the consumer is strong, GDP is strong, the global economy seems to be pretty relatively stable. I don't think you're going to have these credit blowups like we did before where things were just so overcooked, say back in the early 2000s, mid-2000s, and even to some degree when the Greek debt crisis was going on, if you remember that. I think you were over there trying to help negotiate Greece out of that one. Right. There was the Brexit for Britain over there. I know you were over there eating tea and crumpets, raising a glass to those guys. Those were all big kind of like disruptive situations, like the cockroach maybe comment, that all of a sudden didn't happen. So as folks maybe talk about this happening more and more going forward and being concerned about it, I love that because that means it's probably not gonna.
Sure. So next on deck is tech sector. So we've got Netflix coming out with earnings after the close today. So it'll be yesterday as you're listening to this.
What have you been watching on Netflix?
Netflix recently, what were we watching? Well, the big one on Netflix that has been a ginormous worldwide hit was their K-pop anime movie Demon Hunters. That is a signal, I think, that they're trying to bring in the international market because anime is growing in the U.S., I know, with Gen Z and the younger generations, but it is just ginormous across all of Asia. So if they can tap that market, they're going to grow pretty well. But you've got Netflix after the close on Tuesday, Tesla after the close Wednesday. Another one later in the week is Intel, which I think should be interesting just because of the recent government stake in it.
It's back in action.
What are you looking for with tech earnings coming forward this quarter? Are you seeing more double-digit growth across the board, or do we have maybe a little bit of a pullback here?
Well, the double-digit growth has been amazing because the growth has been, say, 15 to 20%. on estimates that have been quarter after quarter at this like 8 to 10%.
Yep.
So you've doubled the estimates, and so we've had double digits, but double the estimates, okay? And that's similar to where we are today. So I think the one thing that we have to consider is that will slow down at some point. At some point, that's not going to be sustainable because why? The number is just bigger. But my take is, if you get another, say, 10%, growth on that level, or maybe 8 or 9 or whatever, 8 to 9 to 10% growth on, say, that level versus that level that it was doubling on, say, 3 years ago is almost the same number, so to speak, depending on what company you're talking about. So it doesn't really bother me that that's going to slow down. In fact, it'd probably be healthy if it did kind of cut back a little bit because the going forward comments are really what's going to matter. And you've seen that with your guys at NVIDIA. We've seen that with AMD recently. Yep. We've seen that with Micron and some of these other folks that are out there talking about, hey, maybe this is a weaker quarter, maybe tariff issues, whatnot. We are still excited about the future because these are the things that are coming down the pike. These are the developments that we have in place. That's really where I think the market's going to concentrate it if these numbers fall a little bit short.
I was going to say the same thing, that I think the data points will be what they are. But with all of the headlines that we have right now because of tariffs, because of all these AI deals that we've made that we've said may take a year, 2 years, 3 years to come to fruition, I think what's going to be most important is listening to those earnings calls afterwards and what CEOs project as a tariff impact now that we have more clear of a picture, and as AI developments and these mega $100 billion deals have gone. I think with Netflix after the close, keep an eye out for ad growth. They recently signed on with Google, and their ad growth is projected to be their huge kind of stable growth piece for the next year. So
and Google needs that too. I mean, that's a symbiotic relationship.
Oh, yeah.
Big bingo. You and I are simpatico. And that's something too to think in mind is like, remember too, these companies have always talked about, hey, maybe things are going to slow down. Maybe we're going to pivot here. Maybe things are going to be a little bit more focused on such and such. But AI has continued to impress no matter what level. And I think there's so much left in this AI kind of explosion, whether it's real or perceived, that it doesn't really matter even what the data or the numbers say at this very moment. It's that hype. It's that excitement. It's that whole thing you mentioned with the banks where we see a cockroach or two, great, but we don't see any more for, say, a couple more days. All of a sudden, that sentiment kind of goes away as far as being scared. And it's just similar to like what we talk about our favorite media folks that are out there. If I turn on the TV and everybody's super sanguine and happy and smiling, oh man, the market must be up. I don't even need to look at the market anymore because I know it's green because everybody's really excited. Yeah. If everybody's freaking out on, say, our favorite news stations, the market must be down, and then you can move on. So similar to that sentiment-driven kind of environment, because that's really what's behind, I think, a lot of these moves this year and part of last year too.
So wrapping up this piece of it, November is historically the best month of the year for the markets, up 1.8% for the S&P since 1950. What do you see? It's not all positive and rainbows and butterflies and Santa Claus and reindeers.
Ooh,
what do you see as
nice.
The biggest risks to the market in the last 2 months of the year here? What could be possible headwinds? I think for me, it is the elongated government shutdown that might come through. And again, even if it's not real causes and real issues that arise from that, I think it's the perceived issues. It's the optics, as you mentioned. I think it's thinking about those employees that may get laid off if that's what happens. So I'm looking at the government shutdown as kind of the biggest headwind in the last 2 months. But what do you see for investors?
That could be a good one. I think the fact too that I think folks just get too complacent. I think you can start looking at things and kind of, to be honest, with the way I haven't been like this totally, but I've had it in my mind where you don't see a lot going wrong still, even with some of the, say, curveballs that have been thrown at the markets or the economy. And so all of a sudden you just get a little bit more like, I'm not worried about this or that. I'm not worried about some kind of poopy earnings season. I'm not worried about the fact that, it's kind of like in a personal situation, I'm not worried that I missed a couple of spin classes last week. Well, guess what? I haven't gone this week yet because I missed them last week, and I'm like, well, I get one by the end of the week. And then next thing you know, it's Thanksgiving, and I'm fatter than a 3-pound robin. Point being, it's like you have to be at least a little bit conscientious of what is bad out there. And if you start seeing our media folks out there talking about how great things are and how these M&A deals are happening and how great earnings have been, blah, 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 if we have a great earnings season, I'd be concerned because if the market reacts exponentially good to that, that takes away all the fear, all the worry, all the hedging, all the folks that just totally pile in at the last minute. That last dollar gets in. My mom calls me again and says, buy me more NVIDIA, please, Scott, or else you're going to be disowned as a son. Then that'd be fine with me, actually. Sorry, Mom. But there'd be a reason to be somewhat scared about something. If nobody's scared about anything, that's when I get scared.
I'll tell you what I'm scared of.
Me.
It's the Titans, the Dolphins, the Saints, and the Raiders.
Yeah, I was going to say the Bears, too. I'd be scared that the Bears are lighting hope into the fact that the NFL looks like they're actually scared of the Bears and think the Bears are actually good.
So my Week 7 notes, let's get into it for the NFL. I think there's a lot of bad teams. I mean, off the cuff, I just listed 4 names. Those were the names that we had said in Week 1. And those aren't like great prophecies, but we said the Dolphins, we said the Saints, we said the Titans.
Raiders.
The Dolphins just lost 31-6 to the Browns.
And they got blown out from the start.
And so, to me, I know you're going to say you think the Titans are the worst because you said it last episode. The Raiders lost 31-0 to the Chiefs, who, if I can make an analogy, I think the Chiefs to me are like Apple, where, for the last 5, 6, 7 years, since the Reid and Mahomes era, you could always count on the Chiefs. You can always count on the Chiefs to be there. You can count on them to deliver performances.
You know what you're going to get. Yep.
They've won 3 championships in 5 years. It's a dynasty. And they may have taken a step back last year. There's questions about the offense, maybe like questions about the product, the iPhone 16.
Coaching, yeah, whatever.
And we projected that the iPhone 17 might not be great. We were talking earlier about how the Chiefs' offense might be broken. All that to say, both are fine, right? The Chiefs are absolutely humming right now. They beat the Raiders 31-0, which isn't.
How's that humming though? Beating the Raiders at home.
It's not a supreme accomplishment, but the offense looks great.
How about the week though before they get embarrassed?
2 weeks before.
2 weeks to the Jaguars.
Yeah.
I mean, Trevor Lawrence falls down in the backfield and gets up twice and still runs the play in. I don't think
Chiefs are here to win.
I don't think. Yes. Well, I don't think the Chiefs are that great, as I don't think Apple's that great. I will tell you though, we talked about this. You mentioned. If you want to really have some comedic relief and make sure you bring some Dramamine or bring some Pepto-Bismol, watch the Titans games, watch the Saints games. I mean, Spencer Rattler, Cam Ward is first overall pick from the Titans this year. Not a bad player. Believe me, I thought he was awesome in college. Loved watching him at Miami. But my goodness, there is nobody else on that team whatsoever. And that team is bad. And if you look at these teams that like are trying to get more following, more kind of respect, that's actually a really good point too, Jake, is like the Raiders are lucky that they're in Vegas and there's other things going on there and nobody's really noticing.
Oh, yeah.
But I'd be concerned as a Titans owner, as a Titans fan, because they've got a lot of work to do. Saints, too, have just decimated their team and had some weird signings over the course of the years, but they've actually been able to kind of still keep some of the core holdings in there. But you don't hear about Alvin Kamara much. You don't hear about Ashton Jeanty. You don't hear about any guys that Cam Ward's throwing to, which, I don't even know who he is other than Calvin Ridley. I mean, it's really amazing how kind of like spread out that talent is to where there's a lot of teams that have nobody playing for them, and I don't know how they consider them to be a viable team to follow if you're actually appealing to your fans.
No, I mean, one thing on the Chiefs, they had more first downs than the Raiders had total plays. It's the first time that's ever happened. I mean, that's an insane stat. To your point about the Titans, they are in just utter disarray. It looks really ugly in Tennessee. I think one game that stuck out to me was the Broncos.
Amazing.
And my preseason prediction that they were going to be the Super Bowl.
You did. You saw that future on? You hedged it all, or what?
I don't know.
You gone back to the Bears?
Yeah. The Bears are going to make the playoffs, but the Broncos look. It's every week is different. It's kind of the Bo Nix experience. We had it in Oregon. You had it in Auburn, where some weeks he looks like Peyton Manning and some weeks he looks like Cam Ward. But they scored 33 points in the fourth quarter to beat the Giants. I mean, just like it had to be a 0.01% comeback, but. That's what you need to win games. I mean, you just need to stack up wins to become a playoff team and to become a winner, and that's what they're doing. I mean, they're 4-2 now. They're sitting close to the top of that AFC West that we said was going to be just,
a minefield.
A minefield to go through. Those 3 teams are just kicking the, absolute
boop
dog out of the Raiders. What's your bold take for the rest of the season?
I've loved the NFL because it's been super entertaining. It's taken over, I think, as a little bit, as we've said before, about the college situation, which is kind of just goofy and gooky, and it's just a weird way to look at how college football has kind of blended itself into the NFL, where there's so much turnover and change, and so much back and forth. I would never say Bo Nix looks like Peyton Manning one week because that's insulting.
The fourth quarter.
That's insulting to Eli Manning as well. I think it's more like he looks between the mix of, say, a Rich Gannon and, say, a Kent Graham, which is for the older folks a little bit out there. Remember those days, which is like he's looked great some weeks, but he hasn't looked sustainable to me. And the Giants just blew that game. I mean, I don't know how the Giants can think about even looking themselves in the mirror, even looking at each other after that game, because they blew so many plays in that game. And another interesting comment of that Giants situation is Jackson Dart, who is a rookie quarterback that nobody really talked about too much in the draft. I mean, they were like, he's going to be 4 or 5. He's got swag. And he's got a lot of athletic ability, and he's learned that offense very well. And he's lost guys along the way. Neighbors is out. They've had some difficulty on their offensive line, and all of a sudden Dart's gotten better as the team's gotten kind of more decimated. So I think when you look at these teams and look at that as they go into the future, if the Bears make the playoffs, Jake, I will say right here on the pod, first and foremost, I will take you to a game unless it's out of the time zone, and then therefore I probably won't be able to go because I need my sleep. However, we can watch the game together, and we can watch the Bears blow it, because I think this is one of those situations where they're getting a hold of Caleb Williams pretty well, which, Ben Johnson has done awesome. The Bears have a lot of talent. Don't get me wrong, and they have amazing fans that keep coming back year after year to get slapped in the face.
No doubt. I mean, I think I've been obviously my heart's been on my sleeve with this team on this podcast, but they've played a weak schedule. I'm not going to deny that, but they're 4-2 now. They've won 4 straight.
They look good.
They're winning games they don't win. I think there's a very clear path. I said this at the start of this run here to 6-2. Now I'm looking at like 8-3, 9-2. Yep. I just love Ben Johnson. Every time we win, I see videos out of the locker room that's like, this is the guy you want coaching your players. I live in a world where my coaches are Ben Johnson and Kurt Cignetti, which feels really warm and really good to me because, like you mentioned, the college game. What team do you root for?
I don't even know anymore
Ohio
these days.
State?
Maybe Fresno State. I mean, it's kind of like
You're an Ohio State fan?
I am an Ohio State
fan. I'm an
fan.
Indiana
I grew
fan.
up. Oh no.
And those are the 1 and 2 teams in the country.
That's true, which is very odd because like Indiana. I mean, unless it was basketball like 20 years ago, you'd never see that,
Never.
which is cool. And that's also part of that NIL thing because it's like there's all of a sudden now people going around and around and around. And it's props to you guys, but you won't beat us in the Big Ten championship. The other
December
quick thing,
6th, mark your
which you
calendars.
can't go to because you're going to be busy.
I
The
am.
other quick thing
I'm
though
at a
is
wedding.
that. I say this as a Vikings fan to Bears fans. I'm jealous of you guys because you have the fan base that is always looking at the profitability of, again, we didn't pay the power bill apparently, of where the Bears are likely to go or hoping to go versus where they are. And that's something that as a Vikings fan base, everybody's just so used to getting beat down and missing things and screwing it up. The fervor and the enthusiasm and the hope is not there. So, hey, look, I hate to say it, but I think the Bears are legitimate this year. And I think what's going to be good is that NFC is not as good as what people think it is because every given week, depending on where the games are and what kind of situation you're looking at weather-wise and how the team is built and the coaching, like you mentioned, a lot of things can change over the course of the last few weeks of the year where it can benefit the Bears to play in some cold weather with Ben Johnson really showing what he's got as far as his stuff and showing how he can control Caleb Williams, which I think is the biggest thing going forward.
I'm going to put it all on the table, and I'm going to say the national champion in college football is Ohio State or Indiana.
Oh, my God.
I think – I'm sorry. The SEC, Bama has really, really, really bounced back after losing to FSU in week 1. They look like a traditional Bama team again. But I think the rest of the SEC, like A&M's number 3 because they haven't lost, whatever.
Georgia had a good game,
Georgia's
though. Yep.
fine. Tennessee's not a good team. So I think it's Indiana and Ohio State. And honestly, I think Indiana's the real deal. The coaching's there. The quarterback is awesome. He might be the number 1 overall pick, Mendoza. Our receivers are sick. Our running back is great. The defense has studs on all 3 levels. This team is legit. I think this team could beat anybody, as we showed by going into Oregon and just beating them down.
You beat them down.
Beating them absolutely
But that's a
down.
conference game. Oregon, it was great to go there and beat them.
In one of the hardest stadiums to play in
For
the country.
sure, it was. We know that from being there last year, Jake, when
there.
Ohio State lost to Oregon, unfortunately, and I got really embarrassed there. But secondly, do you think though Indiana is at the point where they can go down or say like go to a bowl game or go to the championship series and beat an SEC team? I'm just not sure if that's there, and I will be right there with you rooting them on. But I think there's still a lot of people out there that don't even know Indiana has a football team.
Probably.
So if they like to know a little bit about how teams can rise up and how some of these stocks that we've talked about over the years can kind of get out of their way, like an Intel, for example, that's the story of Indiana Hoosiers, if you ask me.
I like that. And I'll take Indiana being a blue chip school as Apple is a blue chip stock. So let's get into our fades or trades for the day. Fade or trade. This is the first topic we talked about today, but Apple will hit $370 a share a year from now. Pick that price target because it's a 41% increase. The Mag 7 average over the last year is 41%. They've obviously been a laggard as they're basically even in that time period. So fade or trade. Apple can go up 40% over the next year.
No dice. And Apple's in the last, few weeks has started to be a little bit above even over the last year or so, back to maybe 230 to 260, but give or take 10 or 10%. No dice. No dice in any way. And I think the trade on that, just to augment that, would be Apple's down more than any other Mag 7 stock out there over the next year.
Wow. I'll fade you, and I'm gonna trade that Apple's gonna be $370 a year from now. We've seen this. It doesn't take a lot to move these stocks. I mean, these mega cap stocks. Any good news moves them up. We also see them tend to rotate. They're not moving as a monolith anymore. So I think you've had Apple be the laggard over the last year. I think we'll see some reversion upwards, and I think they absolutely could be a leader if these iPhone 17 sales and pre-sales are legit.
Fair. And let's talk about leadership. Longest kind of government slowdown in history, or on record at least, if you're counting at home, is 34 days from 2018. this will be, say, this government shutdown that we're in now. Let's say, Jake, could you fade or trade that this government shutdown that we're in right now, which again seems completely unrecognizable and unfeelable, if that's a word, do you think this will be the longest run record by the time we get to the end of it?
I'm trading that. I totally recognize and agree with your point that, you go through the day and it seems like nothing's happening. You wake up and then something has happened. But to me, it seems like the sides are too far apart. And also, this administration is not prioritizing like getting in there and getting this done with the Democrats. So absolutely, I think we're on day 21 as of today. I think this will go longer than 34 days. I liked your point that we talked about either the other day or last week that there's going to be some urgency to get this done before the holidays. So yes. I think you might see this wrap up before Thanksgiving, but I'm trading that this goes longer than 34 days. How about you?
I trade that. I think let's make some records here. Let's make some records to break them, and I think that's going to be something that if you look into Thanksgiving, I think we'll get it done by Thanksgiving. But like you said, that's another 30 days from now. So hey, we get the record, we get it done by Thanksgiving, and everybody's happy.
Everybody's happy. Third fade or trade, your favorite investment, I think, of all time, and a number that I actually have correct today. But are you fading or trading that gold will be above $4,700 an ounce at the end of this year? That's another 10% from where we are now.
Yes, and gold's having a wicked day today, by the way, not in the good way. So I think you're starting to see a little bit of the froth come off of gold. You did sell your gold to me at about $3,400, last couple weeks ago, which is an amazing deal. Thank you again, Jake. Very, very kind. So I would actually probably look to kind of de-risk from gold right here, just because I think gold does not move like this. If you look at gold over the history, I've been investing in gold for quite some time as kind of a way to build out some of the portfolio kind of correlation, build out a way to kind of hedge volatility. And, being that I'm about 155 years old, that's a lot of time in gold. I have not seen gold act like this other than, say, when you've gone out at night with me after dinner. And it's kind of like I don't trust it as far as what this move has been all about. I don't think that this has been a great kind of indicator of anything that's been awesome about the actual metal or about the reason behind it. So long-windedly, I'm going to fade that just because of the fact we've already seen, I think, the prom queen get kissed when it comes to GLD or, say, the metal itself.
I think this is showing our difference in tenure here because I'm going to trade that gold will be above 4,700. Completely agreed on the point that gold doesn't move like this, but we don't see the traditional.
So you're chasing it.
Exactly. It's not showing non-correlated to the market, right? We've had the market have incredible returns this year and last year. Gold has followed suit, and so I think there's enough headwinds also in the market with geopolitical risks that people are still looking for some sort of safety. People are still burnt on bonds. I do think
currency,
that gold and currency, the U.S. dollar, certainly
crushed.
has been
just a little crushed.
Not somewhere you want to be. So I do think it's possible that gold will be above 4,700 by the end of the year.
Cool. Well, let's talk about a little crush. George Springer doing his best, Joe Carter last night, and absolutely crushing my hopes and dreams just because, as you remember, I talked about the Mariners and Brewers being the matchup. Kind of went all in on the Mariners just over and over again as the Mariners, to me, looked like the better team and just absolutely stunk it up and blew it and threw that basically that softball to George Springer that he deposited over the fence, and that was it. So how about this one? Speaking of the Blue Jays, can the Blue Jays, Jake, power past the Dodgers, given that the Dodgers are kind of that quintessential team that has every single position and every single kind of factor going for them? Yeah,
George Springer, I think the most clutch hitter of the last 15 years in the playoffs. I'm fading. I would love to trade this because I don't want to see the Dodgers win again. But the Dodgers coming into the playoffs, the big knock on them was the pitching staff and the bullpen especially. Like, are they going to be able to pitch through games if they can't score 8, 9, 10 runs a game? Blake Snell has been unbelievable.
Ridiculous.
Yoshinobu Yamamoto has been unbelievable. Shohei's been unbelievable. So they've got these guys going 7, 8, 9 innings deep every game, and then they've got Roki Sasaki, who's a starter, closing these games out. So I'm fading that. I think the Dodgers are too good at every position. The pitching's turned it up, and I think they win this in 5 or 6.
I didn't know they had so many Canadian players.
Many Canadians.
Arigato gozaimasu, because
all
I would
of
say
Japan is going to be rooting for
they are, and
the
that's
Dodgers.
actually a big thing to think about. Is like that's really where a lot of the, I guess, some of the good baseball talent has come from over the last say few decades.
Absolutely.
And I mean, Shohei Ohtani is, if anybody is not even a baseball fan, just tune in when the guy's pitching. Tune in when the guy's at bat, because to me, I mean, I love baseball. I've always have, but like the guy doesn't look even like a human. He looks like just one of the most beautifully built robots I've ever seen in my life.
100%.
And it's kind of like, I think he's unstoppable. But I'm going to throw out one thing about the Blue Jays. They have a little bit of this kind of rancor, a little bit of this kind of carrying ability of where they kind of are confident in the sense of, they could show up and probably take a couple games here, especially early, but I think they're going to run out of gas. Long postseason, a long series back and forth across the country with the Mariners, and that can eventually
about as far as you could get.
Yeah, just about, unless you want to go to say Boston to maybe San Diego, and it's like there's kind of like that situation where they end up getting, I think, just a little bit low on the tank of gas, and all of a sudden, then since we don't have a deal with Canada as far as our trading deals, USMCA notwithstanding, we're not going to get them any gas. So all of a sudden, we're going to go for the Dodgers, and I think that's what I'm going to take too. But I think the series is going to be a little bit more interesting, especially at the front end, than a lot of people think.
Okay. Yeah, Shohei 3 homers and 10 strikeouts in a game. I mean, that's unheard of.
The second homer that he hit was an absolute bomb that basically I don't think still has landed yet.
Yep. Last fader trade for this week, and this is one that's near and dear to my heart with all these rumors swirling around about the Indiana head coach Curt Cignetti, but just signed a new deal with Indiana through the next 6 or 7 years, is now the third highest paid coach in college football. Trade or fade, Curt Cignetti is still the Hoosiers coach in August of next year.
I mean, what, he's going to go somewhere else? I don't know.
Penn State's open. There's going to be SEC jobs open. These are the rumors.
If this how your program works, where the guy does well at Indiana and then goes to another competitor in Big Ten for money after he's had this huge rise and he's gotten a lot out of the school, I would denounce that as maybe your alma mater, because that just seems like not a great situation for the school itself, or not something that I'd be really proud of. I think he's still there. I think the problem is why he's there is because they lose, and he wants to rebuild and wants to show that he can do it again. But if he's not there, it's obviously probably a good thing because he maybe did what he could do. But I just hope Curt stays there because he has done a good job there. He is putting it on the map, has put it on the map, and there is a reason to be excited about things going on in Indiana because the basketball stinks.
Yeah, I'm trading this as well. I know the rumors have been Penn State because it's open and he's from Pennsylvania. He's literally the third highest paid coach in college football now, so you can't really play the money card. And with NIL, these Big Ten teams all have very similar budgets. So I mean, they've got now the coach and they've got the money to go spend on big players. I don't see a reason to leave. He's also 63, so what's he going to do? Go build a new program?
Well, I mean, these days for $40 million a year, I might do that myself, and I'm like I said, 155. Secondly, there's a lot of openings out there right now, big company or big college openings like UCLA and so forth. And don't forget about some of the other guys that are out there that may be competing with Curt, with like guys like Lane Kiffin, some of the other guys that are out there, because there's a lot of openings that are still going to happen till the rest of the year that could be more attractive even than Penn State, because Penn State hasn't worked out very well for anybody that's gone there in the last, say, 10 years.
No, I mean, they haven't won since Paterno, which was a long time ago, and Scandal. So. That's our episode for today. Next episode will be on the road, Scott, in Wilmington, Delaware, at two of our advisors' events. So it'll be a cool change of scenery for us. We'll be in a local Italian restaurant over there, and let's leave the listeners with a random ticker roll.
Oh, I thought you were going to let me off the hook. Okay,
no, we got to.
So we got to turn and put our finger up.
Yep.
Okay.
What do you got?
Oh, my God. iBit. I love it. That's great. iBit, the ETF that's out there that we actually utilize for exposure to Bitcoin. And that's legitimately, this thing has slowed down, though, ironically. So that might be a power effect of earlier when the lights went out. But iBit is the iShares Bitcoin ETF. And I like Bitcoin here as like a complement to gold and some of the precious metals out there. I like the fact that it's kind of a hedge against the dollar. I like the fact, too, that it does move somewhat, quote unquote, independently of, say, the NASDAQ and S&P 500. Some days it doesn't. Some days it does. It's volatile as I'll get out, so make sure you have the risk tolerance to handle it. But I like Bitcoin here just because it's kind of that new asset class that has bought itself in. And, Jake, you actually, I think, owe me some money, so I hope you're not paying me in Bitcoin because I'm still taking cash, everybody, as we approach, say, Christmas and New Year's. But more so, I think iBit and Bitcoin is definitely a part of people's lives going forward as we get into, say, the newest century of, say, digital investing and things like that.
I'm with you. I'm trading iBit as well. That certainly legitimized itself as an asset class pretty quickly, I think. Obviously, the publicly traded ETFs help for exposure. Ticked up to above $125,000 per dollar.
And now it's down to about 110. I mean, it's like
10%.
13%.
This could be a good bounce to buy. So I'm trading as well.
I'm trading it.
Awesome. Well, we'll see you all from Wilmington, Delaware in a couple weeks.
Wow. Bye-bye.
Kingsview Wealth Management is an investment advisor registered with the SEC. Registration does not constitute an endorsement of the firm by the SEC, nor does it indicate that Kingsview has attained a particular level of skill or ability. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. All opinions expressed by the positively sloped participants are solely their opinions and do not reflect the opinions of Kingsview Wealth Management, its parent company, or any of its affiliates. You should not treat any opinion expressed on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of an opinion. Such opinions are based upon information the positively sloped participants deem reliable. Kingsview Wealth Management serves as portfolio manager to separately managed account strategies and investment advisor to exchange-traded funds. As of the date of this recording, those strategies and funds held positions in Netflix, Nvidia, and Synchrony, and did not hold positions in Apple, AMD, Google, Samsung, Intel, Micron, Tesla, Goldman Sachs, JP Morgan, Citigroup, or Wells Fargo.